The Australian share market suffered its worst trading day since September last year. The All Ords fell by a pretty steep 2.8%, and the tech sector bore the brunt of this sell-off, with Afterpay plunging by another 10.7%. Its shares have lost more than half their value since peaking at about $160 a year ago, and it was pretty much red wherever you looked. Every sector was down except for materials, thanks to a decent rise from Rio Tinto. A lot of this negativity can be pinned on America. Our local share market took its cues from Wall Street, which continued to tumble from its record highs. Tech stocks were sold off in the US, which caused the Nasdaq to plummet by 3.3%, and that risk-off sentiment spread to Asian markets as well. The Australian dollar also took a dive. It's down to 71.7 US cents. Now this is what got investors spooked. The US Federal Reserve published the minutes of its December meeting, and it was more hawkish than expected. Basically, the Fed said it may increase US interest rates sooner or at a faster pace, and it may reduce the size of its balance sheet soon after its first rate hike this year. It's just another way of saying they'll remove the punch bowl pretty soon. So since COVID first struck, central banks, including our Reserve Bank, cut interest rates and created record amounts of money out of thin air. The Fed in the US alone conjured up $8.8 trillion worth, and that's been inflating share markets, property prices and cryptocurrencies. And with that stimulus being unwound, people are starting to think the value of their stocks is looking a bit overvalued, so they decided to sell first and ask questions later. And finally, Bitcoin. It's often been touted as digital gold or some sort of safe haven asset, but it sure didn't behave like one today. And that's finance.